All right, Bitcoin maxis around the world are, blowing you up now on Twitter as we speak because they don't want to hear this, of course. To say that the tokenomics are better than Bitcoin. I just had Michael Saylor here on last Friday, and I got a lot of other people calling for the end and the death knell of Ethereum, and including thanks to your good friend Gary Gensler talking. We'll get to that shortly. The merge is interesting because, like you said, environmentally friendly, which apparently is a big deal to a lot of Fortune 500 companies and people.
I feel the same way you do, apparently.
Yeah, apparently it is. And look, again, if you're a Fortune 100 company and you got to play to shareholders and, the Twitter mob, then great. If that helps, cool. Like you said, looks like it's now deflationary, whereas Bitcoin technically is still inflationary. And then the other great argument I heard Raul Paul make is now there's potentially a yield curve on Ethereum. Because you can stake it now, you've kind of got a rate of return you can lock in. You've got a kind of a yield-bearing asset, which if you're a pension fund or a Wall Streeter, that's potentially gold, and it potentially sets up a yield curve, which is kind of Wall Street speak for different rates of return for different maturities, which means you can build on the back of it. A lot of good. Now, we saw Ethereum come off price-wise. And again, another phenomenon I got introduced when I had my first 6 months on Wall Street in 1993, where they said, buy the rumor, sell the fact. And I know you talk about this a lot, and it's a term they don't teach you at Sloan School of Business when I was there, but you learn it in real markets. And that is that often opposite things happen from a human expectation perspective, which is the price went up with Ethereum pre-merge, and it did significantly. And then, of course, after it all went through successfully, it came off. And if you're new to the trading environment, you'll say, well, why did that happen? Maybe you can speak on to people why that did happen and whether that's important or not.
Yeah, so first I'd like to talk about why I did not think it was going to happen. I didn't think we were going to see buy the rumor, sell the news. I really underestimated this. And the reason is I go back a year ago to EIP 1559. When it launched, it was an actual functional change to the network, and it caused the price to spike and eventually hit its all-time high. It actually went straight up from EIP 1559. Now, I want you to think about this, Brian. How many more people were into crypto last year than this year?
Yeah, what, 3x?
Significantly.
Yeah.
Right? A significant portion. Way more people were into crypto this time last year. You look at the views on videos, you look at the number of transactions, you look across the board, look at NFT sales, and it's not even close, right? So I guess my thing was there's less people here now than there was then. And if that didn't, a functional change in the network, that didn't cause buy the rumor, sell the news, then I kind of implied that I didn't think it was going to happen this time either. And it certainly did. Now, I was in Alaska hunting while the merge happened, so I didn't get to watch it. I got back. I was gone for 2 weeks, no internet access, had no idea how it went. Was definitely happy to come back and hear the merge went well, the price, whatever. But what happens is that people start hearing this news and they know that the smart money knows that retail is going to come in and buy this thing all the way through the event, where they're just going to dump it at the event. And if it goes up a little bit, okay, but the price rise beforehand was so significant that taking profits off the table is a better choice for them. And so that's what tends to happen. So buy the rumor, sell the news is basically when you are buying an asset up to a time period where something is supposed to happen. 90% of the time, this is based on announcements and news, not functional changes to networks. And so what happens is all hype driven. With the functional changes of the network, it can be a little bit different. A lot of times when projects have launched their own main nets, people looked at that as buy the rumor, sell the news, but that didn't work out. EIP 1559 didn't work out. But you know what works exactly like this? The Bitcoin halving. So the Bitcoin halving, and it doesn't matter, we said this all until we were blue in the face in the last market. We said, look, Bitcoin halving is great. It's going to cause the price of Bitcoin to hit new all-time highs. But it's not happening the day the halving occurs,
Right.
Doesn't matter. People still bought it all the way up. And then after, I think Bitcoin went, if I'm remembering correctly, I believe Bitcoin went up to, I think, about $11,000. It was sitting around 8 as the halving approached and went up, I think, to 11,000. And then the day before the halving, actually, we got the dump. It was actually the day it occurred. And I think it went back down into the 9s, maybe into the high 8s. And it was a big move. It was a huge move for volatility for Bitcoin. We were sitting there like, well, we told you this was going to happen. And then for the 2 months after the halving, people lost interest in crypto again. Like, we thought this was the event. It doesn't matter how much you tell people that this is actually a catalyst for growth. It's not the catalyst for the price to go up today. And just sort of the novice person, for some reason, they just can't seem to grasp that concept with the Bitcoin halving. And I guess what we saw with the ETH merge was definitely something very similar to that. Price is now, at the time of this recording, it's down in the $13,000 to $14,000 or $1,300 to $1,400 range for Ethereum. I think it peaked out over $1,800. And the difference between the halving and the merge, I would say, though, is this is a once in a lifetime event compared to a once every 4 year event. So it led to a little more uncertainty around my ideas of what could happen range from, buy the rumor, sell the news, big dump, all the way up to maybe it could go up to 3,000 and then come back down. It was just a wide range because we've never seen anything like this before. And, if you think about poker, I love to play poker. I got, made it all the way. I was the leader in the World Series of Poker main event on day 5. Last year it was so fun. The dream of mine to play. First time I ever played in it. I ended up going out in 135th place with cracked aces on TV. You guys can go find the clip, but it was a lot of fun. But in poker, you operate on ranges. You will never know exactly the hand your opponent has. You may guess and you may be correct, but the professional players, they look at it in terms of ranges. Like this guy has got something between pocket jacks and ace king suited. He's gotten something in between that. And I've got to make my decisions based off of that range. Kind of the same thing with this Ethereum merge. Like there was a range of different things that could happen, and you should have operated in that. You shouldn't have thrown 100% of your capital into Ethereum pre-merge and then held it through the merge. If you want to do that and then take profits, then that might have been a good thing to do. But you got to operate within the ranges of what might happen in crypto, always remembering that black swans exist, and there could always be something out of your control that you can't think of happening. Like nobody thought of a pandemic really happening. Certain people might have had an idea. It's a possibility. I'd never even heard of a pandemic before that happened. And so, you got to operate in the presupposition of ranges of what could happen to an asset. Also remembering the worst case scenario could always happen. You got to factor that in as well.
All right, but you genuinely thought that if it went through successfully, there actually might be some price action to the upside on this.
Well, like I said, it was part of the range. Like, yes, but I didn't think it was going to make a new all-time high. I said the best case scenario, maybe it will go up to 3,000 and come back. It went from, $1,000 low or a $900 low a few months ago, went all the way up to $1,800, $1,900. That's pretty strong. That actually was where it went to back in May of last year when we had the gigantic dump. If everybody remembers that, it went down to the $1,800, $1,900 range. So I think that it was still a good move up, but it didn't go up as high as we didn't predict it was going to go there. We just gave that as the most bullish scenario it could possibly be. Really, I was surprised it dumped so hard. A lot of people took profits. I think it really touched on it because when you talked about Raoul Pal, he actually wrote the foreword to my book, Catching Up to Crypto, coming out in January. You pre-ordered it on Amazon or Barnes & Noble. He wrote the foreword to it. I love Raoul Pal. He's a great guy. What he was saying about it becoming a yield-bearing asset is, well, now this makes it gigantically appealing for institutions. Well, institutions have already been on Ethereum for a while now. And I think what we saw with this buy the rumor, sell the news is that last year with EIP 1559, the market was retail driven at that point. Now with the lower amount of people in, it's institutionally driven. And I think some of those institutions are probably some of the big offloaders of Ethereum. And, maybe they made it drop down because that's what institutions can do. They have enough money and power to actually control the price to some extent, especially in a watered down market where retail's gone.
Hey, do you want to profit from crypto? Then join my DeFi Academy. The Crypto DeFi Academy will help you create generational wealth. But don't take my word for it. Listen to my students.
When I first got into crypto, I remember thinking to myself, I need to learn more. Brian Rose, learning crypto, learning DeFi, gotta do it.
I am so grateful that I jumped in and did this. I had to break through some limiting beliefs that I can do this, that I can afford this, that I can be in this.
It challenges the things that are deeply rooted within us.
Joining DeFi Academy has been one of the best decisions I have made on my blockchain journey.
This course was a life changer, a game changer, a huge eye-opener, coming from knowing practically nothing at the speed of the learning over 4 weeks was just fantastic.
The information you provided in this class was invaluable.
I feel far more confident in my next steps.
We took complex
concepts and made them easier to understand.
What's different than so many other ones is it just doesn't tell you what to do. It actually makes you do it.
This is for people who are serious about becoming traders. This is the way it should be done.
I realized from this learning experience again that it is not about what you learn, but about who you learn it from.
The energy was insane. I've never experienced such incredible energy on a live call. Brian Rose, you are a legend, my friend.
It's the only thing in the market where you can get all information and learn everything what you need to know.
Everything is so clear and so well done, and I am just forever grateful for this program.
It made me feel so much more confident about crypto than I did before.
I did not anticipate how passionate I was going to become about it.
It's also been like a big learning experience for me, not just in the crypto space, but just an overall balance of life.
What I've learned is, how to take ownership, of my life in a way that I really hadn't before.
Yeah, you can't put a price on that, really.
I would recommend it to anybody, top notch.
Excellence does not come cheap. So if you want excellence, you got to pay for it, but it's so worth it.
Pull the trigger. That's what this course is about.
You're not going to regret it, really. It's amazing.
Thank you, Brian and team.
So what are you waiting for? Crypto is happening now. Click the link below, submit your application, and let me mentor you on how to create generational wealth and build the decentralized financial infrastructure of the future.